Interesting pattern showing up here. Bitcoin's getting absolutely hammered by US bond yields hitting 12-month highs, and we're seeing some serious short-term holder selling pressure capping every rally attempt. The price action is telling a pretty clear story right now. We've got Bitcoin trapped in this descending channel between two critical levels. Up top, that $82,100 resistance is the 200-day simple moving average, and it's been rock solid. Bitcoin's failed 3 separate attempts to break through this level, which tells you the bears are definitely in control here. Down below, we're looking at $77,900 as our key support, and that's where the short-term holder realized price sits. What's really interesting is the mixed signals we're getting from institutional flow. Bitcoin ETFs just saw $635 million in outflows on Wednesday, which was the largest since January. That's mainly coming from IBIT getting hit hard. But here's the thing. JP Morgan actually boosted their IBIT holdings by 174% in Q1. So you've got this tug of war happening with institutional money. The short-term holders are the real story here, though. They keep selling into strength every time we approach that $82,100 resistance level. Their SOPR is sitting right near break-even, which means they're not convinced this rally has legs. That's creating serious overhead supply, and it's why we can't get a clean breakout. From a trading perspective, we've got two clear setups forming. If Bitcoin manages to close above $82,100 on a daily basis with decent volume, that's your breakout long, targeting $84,000. You'd want to keep your stop below $81,000 to give it some breathing room. On the flip side, if we lose $77,900 on a confirmed daily close, that reversal short becomes interesting, with a target down at $76,000. The liquidation map is pretty telling here too. Push above $82,100 and you're going to sweep a ton of short stops, which could fuel that move to $84,000. Break below $77,900 and all those long stops get taken out, potentially creating a cascade down to $76,000. Bond yields are the macro driver to watch. They're creating this bearish pressure even while the S&P 500 is making new highs. It's creating this weird dynamic where risk assets are diverging. The Clarity Act passed, but we're still waiting to see what the real market impact is going to be. Right now, Bitcoin feels range-bound and cautious. The market's compressed between these levels and waiting for a catalyst. That's what the data is telling us.